From Deloitte Tax, welcome to the Tax News and Views podcast. In this series, we talk to specialists from Deloitte about the latest business developments. I'm Carrie Falkenhayn, your host for Tax News and Views. Today, we're going to talk about the results from Deloitte's annual BEPS survey. It was back in 2013 that the G20 authorized the OECD to address base erosion and profit shifting, aka BEPS. And since that time, there's been a number of new developments that impact multinational organizations. The Deloitte annual BEPS survey gauges multinationals' views on the topics that are high on their agendas. So joining me to discuss the findings of the 2022 survey are my colleagues, Albert Baker and Mike Steinsaltz. Albert leads Deloitte's Global Tax Policy Group, and Mike is Deloitte's Global International Tax Leader for Clients and Industries. So Albert, thanks for joining, and I'll ask you the first question. So given that this is year 9 of Deloitte's Global Tax Survey beyond BEPS, can you tell us a little bit about who participates in the survey and when it was conducted?
Sure. Pleasure to be here, Carrie. The survey ran from February 22nd to April 5th this year. The respondents were senior tax and finance executives with large multinational corporations. So we have 163 individuals who responded from 21 countries around the world. Now, the detailed report provides overall responses, along with some by-country and by-sector breakdowns, and includes some more open-ended type questions as well. Now, some of the questions have been there since we first started doing the survey, but we also do a refresh each year to try to capture what's going on in the tax world.
So with 9 years of data, what have we seen in terms of elements that have remained consistent?
Well, an element that's been there, over the last 9 years is a focus on tax governance. It's remained high on the agenda of corporate boards. Some of the specific findings this year are that 77% of respondents agree or strongly agree that their group is concerned about the continuing high interest of media, political, and activist groups in corporate taxation. 66% of respondents agree or strongly agree that the C-suite or board of directors are actively engaged in establishing or approving their group's tax strategy and in assessing and monitoring risk in this area. And lastly, 85% of respondents expect an increase in stakeholder interest in tax behavior and outcomes over the course of the next 3 years. And I think that trend is likely to continue going forward. Mike, did you have any points to add to that?
Sure. So first, I would say there are concerns about ever increasing compliance obligations and complexity. And EU tax directives have not been helpful in this regard. 80% of respondents do not consider the EU tax directives to be successful in simplifying tax compliance obligations across the EU. And 60% of respondents consider directives to increase complexity or compliance burdens. And doing so, they feel is out of line with the apparent policy intention. These views are likely explained by recent releases of final or draft legislation on public country-by-country reporting, the impending implementation of minimum tax under Pillar 2, ATAD 3, which is to address so-called shell companies, recent implementation of DAX 6, and more to be proposed and expected to be proposed in 22 and 23. I guess I would also say that there's continuing concerns about uncertainty leading to tax disputes and double tax. And I don't know, maybe we'll talk more about that throughout the conversation.
Mike, so you mentioned Pillar 2, and both Pillar 1 and Pillar 2, which focus on reallocating taxing rights, and the global minimum tax are certainly getting a lot of media and political attention right now. What did we see in the survey on those topics?
So Pillar 1 and Pillar 2 have been dominating tax policy landscape around the world for several years now, and it continues to do so. It gets a lot of attention politically, and coverage is not just in the tax media, but in the mainstream media as well. So this is a priority area for large multinational corporations as they have to prepare for the impact of it all. Now, in looking at the results of the survey, you have to take into account that this survey was done in February to April of this year, and these days, it seems like almost every week there is some political development in this space. So any of the questions around expectations around timing, et cetera, would no doubt be influenced by exactly where things are at the particular time the question was posed. But to go through some of the findings for this year, 59% of respondents expect that a critical mass of countries will implement Pillar 1, Pillar 2 by 2024. Now, since the survey was conducted, the OECD has in fact moved the target date from 2023 to 2024. 55% of respondent groups have been actively engaged in the OECD Pillar 1, Pillar 2 project consultation, either directly or through other channels. And 47% of respondents expect that Pillar 1, Pillar 2 will result in a significant increase in their group's effective tax rate. 62% of respondents do not expect that the implementation of Pillar 2 will cause groups to make significant changes in their corporate structure. And 46% of respondents have done at least a very rudimentary analysis of the impact of Pillar 2 on their tax profiles. 55% of respondents are somewhat confident that they have the readily available tax and accounting data necessary to comply with Pillar 2. And lastly, 25% of respondents expect that the U.S. Senate will pass a treaty to implement Pillar 1 by 2023.
And Albert, let me just add a few qualitative points to those many good quantitative benchmarks. Because you mentioned that our survey does ask some open-ended questions, and we did ask one about Pillar 1 and Pillar 2. And some comments we got from our respondents, for example, Pillar 2 will likely not have a big impact on the group's ETR, but the compliance burden from calculating jurisdictional ETRs under the new GLOBE rules is immense. And another respondent said, I believe it will be difficult for my organization to gather the data necessary to report accurately. So what we're seeing in Pillar 2 is a slightly decreased concern about the impact on ETR, but an increase in the concern about data and technology and compliance burden.
Yeah, there's a lot of great data there for organizations to reflect on where they come out compared to our survey results for sure. What other big changes are we seeing from prior years?
Well, an area where I've seen a lot of increased attention is tax transparency. There are already some existing regulatory requirements around public tax reporting that are in place, with more to come. They vary by geography and sector. However, we're seeing more multinational corporations adopting voluntary tax reporting standards. Some of the specific findings this year are that 60% of respondents expect their group to align their external communication in relation to tax performance with a transparency standard. Now, the World Economic Forum, Global Reporting Initiative, for example, have set out tax reporting standards. 33% of respondents expect to increase their level of voluntary tax transparency over the next year. Now, that percentage is perhaps not surprising, as it can take time to put together a robust reporting process in place. 42% of respondents have an up-to-date tax transparency strategy for their group, which has been tested with senior management. And 55% of respondents expect that a tax transparency strategy for their group has been or will be set up within 12 months.
That certainly is a lot of organizations focused on transparency. In addition to transparency, there is a lot of uncertainty in the tax world. And when there is uncertainty in the tax world, you often get tax disputes. So what did we hear in the survey regarding tax administration?
So multinationals obviously focus a lot of attention on tax administration. Some of the specific responses we saw this year are that only 31% of respondents think that tax authorities consistently apply the OECD transfer pricing guidelines. Now, this percentage has been consistently very low over the years, as many years as we've been doing the survey. 39% of respondents think that tax audits have become more rigorous in the last 12 months. You'll see in the detailed report that varies by country. 90% of respondents think that tax disputes will increase due to COVID-related deficits. And 60% of respondents are concerned about the lack of guidance on the principal purpose test in the multilateral instrument, which was released as part of the BEPS measures. 31% of respondents have been involved in cross-border tax disputes as a result of uncoordinated implementation of BEPS measures. And lastly, 41% of groups are interested in joining a cooperative tax compliance program where it's available. And 18% of respondents have already joined or are in the process of joining such a program. And that's really to introduce, hopefully, a reduction in uncertainty, because a level of uncertainty is a big concern for multinationals.
Yeah, certainly understandable. What are the other stay awake issues that we saw from the survey?
Let me jump in here, Carrie, with a couple of observations from our respondents. So from a U.S. international tax director, and I think this is a pretty widely held view, transfer pricing and audit defense is a stay awake issue, as are increased compliance obligations and navigating and implementing obligations under Pillar 2, as already mentioned. And then a similar perspective from one of our respondents who's a vice president of tax in France, focused on GLOBE. It's increasingly important for tax people to understand IFRS and other consolidation standards. That was a quote. And I think that's true whether it's IFRS or US GAAP. The encroaching of financial statement standards more prevalently into the tax law through GLOBE and also ultimately in Pillar 1, should that proceed, is bringing a whole new dimension around complexity and the need for coordination between the tax department and accounting. So those are some challenges our respondents say they're facing. Albert?
A couple of others. So this is coming from U.S. tax VP, that the ability to project and report accurately on the significant amount of information that will be required to be collated and produced. I think this is reflective of a comment that we've seen from others. Part of the challenge here is that all the other existing obligations that are already there aren't going away, and all these new ones are just adding to it. And so the level of data that's required to pull all this together, get it out on a timely basis and accurately is certainly it's a top priority for companies. And a last one is coming from a UK tax VP, sheer scale of the compliance burden, particularly when factoring in the system's impact. He fears that what will happen also if the U.S. doesn't implement Pillar 1, and we may be destined for more unilateral measures and double taxation. So again, it's the concern around the uncertainty, and there's concerns about Pillar 1, Pillar 2, and the new reporting requirements there. But there's also concerns if it doesn't go forward, because that can lead to more unilateral measures and more double tax, which nobody wants.
So lots of interesting data in the survey. What other collateral materials will be coming out, and how do people find those materials along with the survey itself?
So there's 4 pieces of collateral material. We have the full report. We have an executive summary. There's a 2-page overview, and we have a 1-page infographic as well. And Googling Deloitte's 2022 tax survey, no doubt you'll be able to find it. And any questions on it from yourself, Carrie, or from anyone listening to the podcast, please don't hesitate to reach out to myself or Mike.
Well, thank you. Thank you both. It is very interesting to see how the survey has evolved over the years and where multinational companies are focusing. So thank you for that. And you heard Albert talk about where to go find more information on Deloitte.com. If you want to reach out to Mike or Albert, go to LinkedIn and reach out to them directly. But thank you all for joining in and listening here today. I hope you're able to join us for the other podcasts in this season. But in the meantime, thank you again and continue to be well, everyone.